here's what I know is silver really should be triple digits, and it will be one day. Hi, this is Mike Maloney, and I'm joined today with Jeff Clark and a special guest, Dave Morgan, who has so graciously stepped in to cover for Adam Taggart, who is on vacation in Hawaii. Jeff, what have you got for us today?
I've got lots of very interesting things for you guys today. David, Silver Guru, thanks for joining us. We really appreciate it.
Oh, my pleasure. Always. Thanks.
Well, this first item is our news article of the day, and it's an article I wrote that we posted yesterday that's been getting some attention in various circles, including Twitter. And that is that I think a new inflation era might be upon us. And in this article, what I liked about it is that I go back and quote a lot of research that has been done, a lot of historical studies that show why inflation is virtually guaranteed at this point, that it can ignite suddenly, that most investors have no experience with high inflation, and that the traditional inflation hedges are actually overvalued now, and so may not offer the same kind of inflation hedge they otherwise might, leaving us with just one option. But Mike, what do you think of this article about inflation may be ahead here this year?
I think you're absolutely right. And you're quoting official statistics, and it's really interesting. There's a chart in here of the U.S. federal deficit being the largest in history, but that's nowhere near what it's really going to end up at. A while back, I did something called early warning, and I had my researcher add up the cumulative budget deficit surplus each year, and then the cumulative change in national debt for each year. And we were at about a $19 trillion national debt then. And the cumulative budget over the same period of time, from 1967 to today, over the same period of time, the budget deficit only added up to there was about a $7 trillion lie. They always lie. This is part of the job requirements. If you're looking for a job in government, part of what you've got to be able to do is lie convincingly. And so it's going to be a lot worse than this. And I think this is a great article because it does show that energy gets stored for a little while. They can create all of this currency, and it inflates this asset class, that asset class. It might inflate savings, but after a while, it's all going to come out of hiding, and then you've got raging inflation. What do you think, Dave?
Yeah, I agree. I was thinking about Catherine Austin Fitts and Professor Skidmore that showed there was like 20 or 21 trillion that really wasn't accounted for. So we can add that on. And the thing that I've been trying to stress over the last few interviews on this topic is the unfunded liabilities. I was on a national radio show, and the guy said, well, we just cut the spending, like we get with, and I explained, no, because we have promised future payments to Social Security, Medicare, Medi-Cal, the military pensions and all that. And that, if you do the math, it's arithmetic, is so astronomical, there's no way. It could be paid in real terms. In nominal terms, sure, you can get that, $4,000, $5,000 check every month. But as Alan Greenspan said some time ago, we have no limit. We can always fund it. What we can't do is guarantee the purchasing power of it.
Yes, very good point. Well, on to tweet of the day here. This is from Deborah Robinson of Silver Squeeze. And she shows a chart here from Solidus Max. And this is basically gold priced in the Turkish currency, the lira. And you can see how astronomical it's risen here since 2016. It was under 4,000 lira. It went up to over 16,000 lira at the end of last year. It's since pulled back a little bit. But Deborah's point here in her tweet is saying this is the U.S. gold price in the next few years. David, to you first, what do you think? Is this the gold price over the next few years?
I do believe so. I know we're in a trough now, we're in a trading range, but one thing that we have discussed for years is that gold is like a hedge, insurance. It's discretionary. If you got a big portfolio, you should hedge it with gold. But there's going to be a day where it's mandatory, and absolutely everybody has to have it, or they don't have anything. And that's what we're seeing with the lira. And that's going to happen with the dollar. There'll be a day where you don't want dollars, period. You want anything that has value in the future, and you don't want the dollar. And that's the idea, is that it becomes from a discretionary investment for the rich or whatever. It's for everybody, absolutely everyone. But the idea that it becomes mandatory, everyone knows that the time has come. And when that trigger point, that tipping point, that consciousness, that shift in ideology changes, and it can happen overnight, you're going to go from 1 out of 100 people wanting precious metals to 99% of 100 people want it. And that's when you can't get through the door. I just want to give a real quick one, and this goes back, I'm looking at some of my old stuff, but at every Austrian ought to know about the hard money movement from Mark Skousen. I mean, this stuff is built on principle, and the principles are there regardless of the day-to-day, week-to-week, month-to-month buzz and mainstream jibber-jabber.
I want to comment on that. You said like 99 out of 100. And I think even that last person that last person that misses the boat is going to be out at an intersection shaking a cup, hoping for a silver dime. The other thing is, silver is tremendously undervalued still compared to gold, even with the recent change in the gold-silver ratio. And it's a much more rare commodity because we use so much of it up. And because the vast majority of it comes as a byproduct of mining base metals that require a good economy, that require an economy that's using up a lot of copper, a lot of zinc, a lot of lead. So when all of that supply goes away, one of the things that you said years ago, it's monetary demand that is going to be the thing that lights the fuse under silver. Where it really takes off from the launch pad and goes to the moon. And I absolutely believe that. And the day that everybody needs gold is the day that everybody is going to want silver, but they won't be able to get any.
Right. Very good point. Well, if you like what you're seeing here, please hit that like button below and be sure and subscribe so you get all our videos. On to chart of the day here. And this is from Gold Ventures on Twitter. He's a good follow on Twitter if you're on that. And this chart basically shows that silver just this morning hit its 200-day moving average and bounced off of it. So David, what do you think? This is some compelling evidence that gold may have hit a bottom here, maybe? What do you think?
I do, Jeff. I also think that silver, as much as it's managed, is showing great resistance. I know the price isn't where it really should be in a true free market, but I think it's showing such resistance with all that's going on that I'm pretty happy actually with the fact that it resists. It's being powerful, even though the price again is not reflective of what it should or could be. It's saying it's staying strong, and I like that. And I'll stop there.
What do you think, Mike? Is bouncing off its 200-day moving average? Is this maybe the bottom for silver? What do you think?
It's possible. Nobody knows. We're at this inflection point where the entire world has gone crazy, basically. But silver has a big history of it doesn't necessarily respect the 200-day moving average as much as gold does. When it pierces it by a lot. And you have to look at other support resistance factors. And so, if we, right now it has made a bit, you can't see it on this chart, but it has made a bit of a head and shoulders pattern. It's violated the head and shoulders. Next stop should be right around 22. If it breaks that support level, which is a long-term, I mean, it goes back more than about a year now, that support level, a little less than a year, I guess. But if it breaks that, then the next stop is, there's round number support of 20, and then there's like high 18s, low 19s, potentially. Nobody knows. But here's what I know is silver really should be triple digits, and it will be one day. There's no other asset that's still selling it at a discount to its 1980 price. Everything is 10 times its 1980 price at a minimum. And so, not gold yet, but it will be. So gold and silver they were in a bubble in 1980. But to be in the same relative type of bubble, you would have to have at least $5,000 an ounce gold, if not $40,000 an ounce gold. And then you'd have to have a gold silver ratio that's somewhere below 20, like 10. So now you're talking about that would be $500 silver. That sounds crazy. I'm saying that silver is destined for the triple digits. What do you think, Dave?
I agree. I don't know where it lands, and just to back you up, I mean, silver surprises everybody. It doesn't adhere to the charts or technical analysis as well as some other commodities. But yeah, the future is higher and brighter. And I'm just going to chime in off topic real briefly that there's signs right now that are visible, like the Perth Mint having issues, and there's another bullion place in Australia. I'll be doing an interview here shortly about that. But the headlines that are in the Australian paper is it's like the Perth Mint versus the conspiracy theorists. And I'm sorry to digress, Mike, but I think it's important because the whole idea about conspiracy theory is a meme that's generated basically by the CIA. At least that's what a lot of us have researched. And it connects your neurons. It's kind of a mind control mechanism. If you use those two words, then people automatically slough it off. So I'd like to say this: it's either true or it's false. It's not a conspiracy. It's either true or it's false. And the truth is that the Perth Mint is unable to deliver. Now, whether it is one person or 100 or 1,000, it remains to be determined. But I don't have to make my case in court that there's a non-delivery and have 1,000. I just have to prove one. And so I'm a little upset by this because I've seen it so many times. We saw the Northwest Territorial Mint go down. We saw Tulving go down. We saw Morgan Stanley get a big fine for buying silver and people are paying storage that didn't have any at all. I think they did it twice. UBS did the same thing. So I went on a kind of a Twitter frenzy last night and went back into history. I think I shoot 3, 4, or 5 of these instances in the past where these mints and also brokerage houses that purportedly was storing physical silver for you weren't doing it. And this is something that really, really irks me because it's fraud. Right. And I think it should take more than just a fine. I think there should be people that actually pay the price, like maybe not behind bars, but they cannot do business in the silver market anymore. That's what they did to the Hunts. So what's good for the goose is good for the gander. If you're manipulating the market, Mr. Hunt, and you can never get in the silver market again, how about UBS? Never in the silver market again. How about, so I'm sorry, I'm on a rant, but honest to goodness, I am about fairness and honesty. And I really dislike what's happening, Mike.
So do I. And I have to say that when fines are issued, they need to exceed the profits that you made by stealing, because that's what they're doing. When, the commodities exchange and the manipulation that has taken place by the big brokerage houses and even the people that set the London fixes, being able to know what the price is going to be and front run things, but all of the spoofing that they do on the markets to manipulate the price this way and that way, and then just vacuum up all of the pennies. They manipulate the price constantly, and they've been doing this for decades. And then they get this little slap on the wrist. They get a $300 million fine or something when they've made 10 billion. So it's like, okay, let's go out and do that again.
Well said.
But yes, one of the things you pointed out was people selling silver that doesn't exist, and then charging their customers for storage. And this has gone on for a long, long time. A lot of people have sort of forgotten about this, but it shows you why you should be storing with a third-party vaulting service like Brinks. When somebody buys a storage account at Gold Silver, when they buy metals and they choose to put it in storage, they're putting it in storage with Brinks. Brinks does the auditing. We don't have anything to do with it. Brinks just wants us to do the billing for them. That's all. They just don't want to have to bill 10,000 people. They want to bill one, and then it's our job to send out the bills to the individual. But it's not us storing it. It's Brinks Security, and nobody has ever lost a penny with Brinks. It's not a brokerage house. It's not part of the banking system. It's fully insured. And this is one thing that people, regardless of what dealer they buy from, if they buy, they should be buying physical. And if they're going to store, it needs to be stored with a third-party vaulting service that has insurance and a reputation. So anyway, I'm done with my rant. But and when these big entities can sell you silver that doesn't really exist, they've sold you physical silver, they're charging you for storage, but actually they've just got futures contracts, they've got some price exposure. And so they're raking it in on storage that doesn't exist. When they do that, they didn't actually have to go out and buy the physical and take it off of the market. Right. And so if you're buying something that they can create in unlimited quantities, you're not causing the price to go up.
Right. Very good. Well, good rant, you guys. And yes, third-party vault storage is very critical. So, well, on to some reader feedback here, Mike. This is from Jetarai, if I'm saying that right. I still remember when people were outraged at the first bailout, and it appeared it was a one-time only caper. Fast forward 10 years and look at us now. 5 years ago, I found hidden secrets of money. Thanks, Mike. I'm all in at physical in the miners. The countdown is still ticking, and I'm buying every dip I can. What do you think, Mike?
So one thing that he did say is that he's all in on physical and the miners. And when you introduce mining stocks, you're introducing leverage, and all forms of leverage can be dangerous. And here, miners, if you're an amateur, there's a whole bunch of unknowns. One of the things that Robert Kiyosaki used to say is that investing is a team sport, and it is, especially when you're going into more dangerous waters. Miners can do things like they can have a mine collapse, EPA restrictions. They can be in a jurisdiction that's dangerous, where the government actually nationalizes the mines. They can have labor strikes. There's a bazillion things, and they can have a bad team, bad management. You have to have your own team when you're introducing leverage, and that comes with things like newsletters. And there's lots of great newsletters out there. There's great advice that you can get. You need somebody that knows how to analyze a claim, a mine, and to be able to look at the team and see what experience all of the people in the management have had. And so that's what Dave does at the Morgan Report. And there's a whole bunch of them out there. So it's not just Silver Investor. There's a whole bunch of different reports out there that you can get. But you definitely want these people on your team if you're going to go into the miners. Don't just go into it blindly. I rarely give advice. I tell people what I'm doing. But here is one thing I always say: the only advice I give is that you want to increase your financial education. And having a team is part of that. You're learning from them. So if you're going to dabble in the mining stocks, which does introduce a lot of leverage and you can make some huge gains, please go in it with your eyes open and go in it with a team. So that's all I've got to say on that one. So do we go to the meme next, Jeff? The meme is great.
Let's get David to weigh in on that. David,
okay.
What do you think about gold and silver versus the miners?
Well, I've always said physical first and then the miners second. And, I was a newsletter junkie in my youth. There's a lot of good ones out there. No one in the industry gets it right 100% of the time. But where we structure it, top tier, mid tier, and speculations, keeps it in a risk reward profile that's beneficial to the investor. And that's basically my mantra. That's what I've been doing for, many, many years, and I continue to do so.
Yeah, very good. David's letter is great. I can personally attest to that. He and I love investing in the miners, but like Mike is warning, it is risky. So you have to be aware of what you're getting involved in. So, well, if you haven't read Mike's book, the link is below. You can do so for free. Do yourself a favor and check it out. So on to meme of the day. So Mike, what is our meme today?
Our meme is that the best stimulus package would be a 0% income tax, and it's absolutely true. So I want to thank everybody for watching, and we'll see you next time.
Thanks, Mike. Thanks, David.
Thanks, guys.